Good day, everyone. Well, we see that the markets are, well, they've been pretty sideways, certainly with the Dow having dipped actually the last couple days. Speculation that there was some nervousness ahead of Trump's inauguration that takes place today at 12 noon. Nevertheless, we're up on the day right now. Doesn't strike me as anything particularly negative out there in terms of the price volume action. We've still got a lot of names on the focus list. More or less, they seem to be holding up with a couple exceptions. Obviously, something like ANET, which we discussed. When you have a situation like that, you just exit. You don't want to ask any questions. That's always been our tactic in terms of dealing with a stock that unfortunately might have a mini gap or worse at the next day's open. And you have also, I think on the list there's XXC, which is a coal stock, but obviously this one has been showing a lot of weakness because it dipped below the 50-day and it hasn't really been able to rally back above it. It tried, but on weakening volume. So that would be an example, say on the 11th of January, where it closes at the 50-day, but on lower volume. And so at the very latest, you'd be selling the next day, when then once again it starts to turn back around and head lower. As far as things like gold and that's precious metals have attempted to bounce here. There's a lot of speculation about where they're going to go, but again, there's so many cross currents with this stuff. It's very difficult to make any sorts of meaningful projections. The long-term trend of precious metals has been a downtrend since 2011. So we're in 2017. That's a good 6 years. And are they going to turn around? Again, it's speculation. CRB index, that is fairly closely tied with the price of oil. That seems to be attempting a meaningful bounce of some sort. That too was in a downtrend since 2011. Recently, as of early 2016, so about a year ago, it had a bounce, and it looks like it's attempting to stabilize and move higher. Same with the price of oil. As far as the fireworks for during or after the Trump election, again, that's speculation. You just got to look at your stocks, watch the price volume action, and they'll tell you what you need to do. It makes great headline news for all these media agencies to talk about, the worries, the wall of worry about Trump this and that, it's quite meaningless because it's not going to make you money. It's going to make you worried, and if you're injecting fear into your trading, then you're more liable to sell at inopportune moments. Maybe you're selling into strength to capture premature profits. We advocate selling into strength, but that's in context again with the stock's chart. So if a stock gets ahead of itself in its price in relation to the chart and to the general markets, then of course go ahead and take some profits. But otherwise, don't let your emotions rule the day. And news, sticking too close to the news is a good recipe for that sort of behavior that inevitably will end up costing you money in the long run. Just wanted to mention a couple, just going through the list here. Nvidia, which had a short-term top, looks like it is attempting to stabilize.
Can I jump in here, Dr. K, and point something out? You'll notice on Nvidia, you see what it did here? It just barely undercut this low. I think this low was, what was that low, Dr. K?
That was not, well, the 99.38.
Yeah, so you went to 99.11 yesterday. I saw it do that, and it just barely undercut it, and I thought, okay, is this thing going to bounce off the 50-day and then try and come off, or is it going to turn here? and it goes ahead and turns. And of course, I didn't buy any, but I saw it. This is a couple days ago, I think on Wednesday when this happened. And then it got back up to the 20-day, which looks like it's shortable, but you know what you got going on here now, 1 5-day pocket pivot in here. You might get some more here, but now it's sort of hanging out. So I wouldn't count this one out necessarily. I think short term you have a climax top, but it may just set up in base. I think earnings are coming out, what, in mid-February? What do you show?
Let me see here. Hold on. I was looking at something on this other one. I'm using that that earnings. Hold on a second. I find that that app that we're beta testing quite good, by the way. Earnings show February 14th.
Yeah, let's see what I show here up on HGS Investor. 215. Yeah. So yeah, you can get the earnings dates from a variety of sources. I'm always, frankly, surprised that O'Neill's products never really have, often have the incorrect date or have an E behind the date, and they're estimating. I don't know what they're doing. But in any case, yeah, earnings come out in the middle of February. You're expected to see, what, 145% increase in earnings next quarter?
I'm showing 60% increase,
Okay.
83 cents.
Yeah, those are O'Neill estimates. I'm using Reuters estimates, which I think are Zacks, or HGSI uses Zacks, I believe, which come from Reuters. But in any case, I think technically it's not really breaking down. And of course, everybody's going to jump on it on the short side, but this could set up again. So I would keep an open mind about it. I don't, you know, start madly shorting something and just sit there. If the price volume action in real time is showing me something different, I just flip. So I notice a lot of people like to get heavily invested on their opinions, and I guess that works for some, but in this market I think you have to be ready to go either way. I did want to say something about the indexes real quick, Dr. K, and notice how the Dow is pulling an undercut and rally. It undercut this low back here in December right there. So it's undercut that low yesterday, so it was looking ugly. See, here's the ugly duckling, but the volume was light. I saw this and I thought to myself, okay, that's going to set up an undercut and rally. Everybody's basically sent back all their Dow 20,000 baseball caps. I still have my engraved martini glasses, however, in anticipation. I think it's probably still coming. And I'm actually looking for the market to rally after the inauguration, mainly because the crowd seems to expect that it's going to sell off. But basically, you're just seeing the indexes track sideways. So a lot of the action in individual stocks has been consistent with what you're seeing in the indexes. They chop back and forth, and your best bet is trying to buy on weakness. And if you're inclined to do so and swing trade some of these, you can sell on strength. So what if we go, what do you say we go through the list?
Yeah, let's do that.
Let's start with A. A is for Argan, which I pointed out last week that it had undercut some lows here. Let me just shrink this a little bit so it's kind of a little bit out of the way. I just need the list. There we go, that works. So you can see that and see this. Everybody see that okay? Nobody's having any audio issues. We have someone saying they are having audio issues. That happens once in a while. Usually it's on their end, so there's not much we can do about it. But in any case, Argan forming a base, it was staying above its 50-day. So with this stock, if you bought it down here when we first put it on, near, what would that be, probably around 58, 59, you could simply, it has shown a tendency to not obey the 10-day, so you would use the 50-day line as your ultimate selling guide. And that's a simple way to handle a position if you want to be a position builder. So, I mean, you know, I like to swing trade, but not everybody has to do it that way. If you find a good stock and it acts pretty well and it seems to hold above the 50-day, use the 7-week rule and stay with it. But you notice the undercut of the prior lows, there's actually two lows, one here and one here. Can you guys see that? Everybody here is okay, right? I just want to make sure. Can somebody let us know? Yep, okay, good. So as long as there's just one of you, we know anybody else, it's probably on their end. I would say just restart. Well, they can't hear me. I already texted them and told them to restart. In any case, you undercut these two lows here, and you're back above, holding along the 20-day line. So it's building a base. It's a strong upside move. It needs to build a base. What are earnings, Dr. K? What do you show?
Earnings showing Estimated 84% up next quarter. Overall, earnings
What
have
day?
been fluctuating. Let me go to my app here because the O'Neill thing is usually wrong.
I'm
And
showing
O'Neill says
they already announced earnings, right? So it's 413. Yeah, they came out with earnings somewhere in here, and they rallied. So they're building a base. I mean, they're. What do you show for earnings estimates? I show next quarter up 86%.
I show 84%.
So they're close. O'Neill will massage the numbers because Bill used to take out things like one-time charges or one-time revenues, whatever. So, and Reuters, Zach, they just kind of put it at face value. And I would point out that the institutional clients that we had, they didn't like that because their numbers were different from O'Neill's. And so eventually we started offering first call earnings data along with O'Neill earnings data because the institutional clients were all complaining. So I know a lot of people complain, at least I hear this from the HDSI guys, that they don't show their earnings the same as O'Neill. But to me, if they're close and it looks like a reasonably good trend, or I can just go on the company's website and check out their financials and what's going on with the company, you get a pretty good idea. And a lot of times, the whole Can Slim thing of 5 quarters up over 25% and all this other stuff doesn't really play out so well in reality. So there are a lot of opportunities that show up based on a more forward-looking base view, and we've talked about that many times. The 7-week rule, you need to read our book on it or go to the website and read up on it.
Yeah,
So,
just type in 7-week, roll into the FAQ search bar, and it'll detail it for you.
so I think the speech starts, the inauguration itself, the swearing in is at noon, which is Eastern time, and so that's 9 o'clock, so we'll definitely have this wrapped up by 9. All right, cruising along. You notice all the steels had pocket pivots. AKS did not because this was not higher than the volume 3 days earlier. And the X-Man, as I like to call it, it had a pocket pivot and it's holding the 50-day line, so it hasn't broken down. But this thing's just chopping back and forth, and so you can see that X sort of reflects the market because, like the Dow, it undercut its prior lows 2-3 days ago, and it's turned back to the upside and above these lows, but it's still hanging just above the 50-day line. So I think in this case, you would use the 50-day line as your guide for a stop if you're in anywhere in here on these pocket pivots. But it doesn't help if you bought, like say, you have this pocket pivot back here in early January and then it pulls back and you bought there, you might have been shaken out in here. That's a possibility depending on your percentage stop loss. But I would usually use a 10-day line if I'm going to buy a pocket pivot and then try to get in at the pullback to the 10-day line. I would use that as my stop. But all of these are just chopping around. Another metal name, copper, is FCX, and it's hanging in there okay. So all the steels, everybody knows why the steels got moving, yes? That was because Wilbur Ross, I guess billionaire investor Wilbur Ross, who's going to be Secretary of Commerce, was talking about doing something about steel and aluminum dumping into the market. So that's what set all the steels off to the upside, but it hasn't sustained itself. Somebody's asking which book. Well, that would be our first book, Trade Like an O'Neill Disciple. Okay, where were we? Amazon. Amazon comes out with earnings next week. Stock, since it had the pocket pivot 2 weeks ago, it's been hanging in tight. On the weekly chart, there's a long move there. That's a leading stock, huh? And it's just building a cup sort of formation here ahead of earnings. So it's almost looking like it wants to set up to break out. Maybe it doesn't on earnings. We talked about ANET. That was actually, if anybody was awake to that, it was actually, you could have hit it as a shortable gap down right at the 50-day line. It opened up at 94, I think it was. It rallied just a pinch and then rolled back below the 50-day line. A lot of times if I see that on a gap down, I might try and short it. You could have gotten away with about a 6-7% gain. But it's not an easy one to pull off because the one thing you have to watch out for is you're undercutting this other low in here from December. So that can set up an undercut and rally, which it actually did, okay? Because it comes down on top of this structure over here. And I'm kind of looking at this as a short now, but it comes down on top of this structure over here and bounces, which makes sense after undercutting this low here. So now you find resistance at that low near term, and it may sit around in a bear flag. Earnings come out in the middle of February, I think. not too, when did they come out actually, Dr. K, do you know?
Yeah, I was just checking right now. ANET. It says February 15th.
Okay, so I don't know if something changes, but they had the, I think it was a Customs Bureau or whatever took away, apparently they previously ruled that the company's technology didn't infringe on a Cisco patent, and so that was reversed, and that sort of sent them, that's a big gap down on heavy volume. And if you did own the stock on the basis of this 3 weeks type breakout, you would have to just bail out at that point. I mean, for me, a 6% loss is more than I want to handle or deal with, and I'd rather be out and then think about what I want to do. So, and the other thing you could do is you bail quickly, notice that the 50-day turn around and go short, and guess what? You could have made up your loss by the end of the day. But that's nimble trading there, but also being able to recognize the pattern in real time without having an opinion either way. So I think it's a hilarious, like on Twitter, there's so many people who have such a stake in their opinions, and they make the mistake of thinking that I do too. So if I was shorting, say, what was one that was a really, Carnival Cruise Lines, like last January and again in last April when the stock blew apart, they think I'm still short the stock. So idiots that they are. Anyways, Box is hanging in there pretty well after the double bottom breakout. You really haven't had much of a pullback. You had one pullback here and it's bounced, but earnings I think are coming out soon. Are they out in March or April? Let's see.
So you're checking.
I can very quickly.
Actually, let's. Oh, here we go. March 7th. Yeah, they're March 7th, according to this.
Here's a quick way for me to look at where the dates are. I just line them up by earnings due date right here, and these are all the names currently on the well, not on that, here on the VoSI focus list. So I can put them up here and I get a sense of what's happening. So we're looking at Box right here. So I'm showing March 8th. So sometime in there. But if you own a stock, you always want to go to the website and look and see exactly what day they're going to announce. So everybody says sound is good. Someone says sounds good and I have lousy hearing. Yeah, me too. Anyways, okay, where were we? Viva, this one's just kind of hanging along the where's all this stuff coming from? This is just hanging along the 20-day and the 50-day. Earnings come out not till March, so I'd watch this on, you're getting a low volume pullback. I'm actually watching this to jump in. So I bought some the other day as it was dipping below the 20-day. I got a pop, but the volume wasn't that great, so I just decided to back away, take some small profits, back away, and just kind of wait for the inauguration. Because like I said, my view is I think you've already had the sell-off. Everybody's expecting the market to sell off after the inauguration. It may just rally. So, and the way the indexes look, you can't really tell. I mean, the Nasdaq's hanging up near its highs, and it just continues to trend higher over the last two months or so. And trying to make a bearish case in this market is very tough, especially when you see things like CSX gapping up like that, or you got Skyworks Solutions having a gap up today. So there's a lot of constructive or strong action. Of course, it's all coming on the heels of earnings, and that'll get us to Netflix in just a second here. So let's see, keep going down here. Facebook, they've got earnings coming out on the 1st of February, so that's a couple of weeks away, but it's just hanging tight, volume drying up. Not much you can do here, so you're not going to come in on that. We looked at FCX. Earnings next week, not much you can do there. Glaukos, to me, is pulling back in a viable position here. Coming back in just under the 10-day line, volume is drying up. So I think this is testable. If it doesn't hold the lows, then maybe it's heading to the 20-day. But you can see you got a cup with handle. You got earnings in March. It probably needs to build more of a handle here. And pullbacks are probably where you want to try and come in. So it's a thinner stock, 500,000 shares a day. So, but it's pulling into a spot where I get interested, and that's what I do. I go hunting around my buy watch list, and I would say I stick to maybe 10 stocks that I'm looking at any given time, and just watching them very closely. and looking for pullbacks to buy into as opposed to chasing strength, which I think is what idiots do these days. So speaking of chasing strength, here's JD.com. This is a stock that was very viable along the 25 area. It's up another 10% from there and has been around all around the 50-day, but you know, it's moving up to the top of the base. Earnings don't come out till March. So this is another one you have to buy it on weakness. So you see it come in hard. It'll look ugly when it happens too. You know, they don't make it easy for you to buy anything on a pullback in this market, let me tell you. Things will look scary. And then they just, you know, stop and turn around and go back up. Mosaic is acting okay on the daily chart, trying to break out of this little cup with handle type thing. So that's what it looks like on a weekly chart. You can see that it's trying to come out of this long structure. This is sort of a bottoming base, and I guess maybe that's a possibility. You're at the highs and it's trying to break out, so that's the macro position. So it could, you know, I guess you have a little overhead from here. I'm not sure, but it seems to be taking a little time trying to come out here, but it's holding in the highs above the highs of this range, so maybe it's going to go higher. Hey, Dr. K, can you think of any reason why fertilizers would suddenly be hot? Is it because of all the BS coming out of Washington, or
Yeah,
or just
fertilizers.
stuff? Are they just
Well, I
stuff
guess
stock?
well, it's a stuff stock, and about the they serve as a fuel, and so perhaps because all the commodities, well, the Commodity Research Bureau's index has been turning around, possibly reversing this long-term downtrend we've seen since 2011. So that could have something to do with it, you know, being stuff stocks. You know, if I look at the CRB index versus, say, MOS, there's a fairly good correlation between the two.
Oh, wait. DBC. Yes, it seems to be. So anyways, but that's kind of extended. Here's Myovant. This was looking like it wanted to go a few days ago, last week actually. It's drying up, volume drying up very, you know, sharply. But it's just hanging around in a base, and it is a speculative development stage biotech, so it's not like it's got big earnings and sales and is very thin. Trades, what, 120,000 shares a day? I don't know. I avoid stuff like that, frankly. Okay, Netflix has a Bible gap up. This is what the pattern looks like on a weekly chart. So you've actually gapped out to new highs. So, you know, the breakout point on the new highs is right here at 133.27. You're at 139.78. You're holding above the intraday low yesterday. True confession, I actually shorted Netflix yesterday above, like, I think 141, 142, somewhere around there. And then I closed the position out going into the close, and made a little profit, but nothing really major. And got a feel for the stock. I mean, you could see sellers were hitting it, and I know short sellers like to come after it. But the bottom line is you have a viable gap up, so even though I'm able to make money scalping a short on an intraday basis, it gives me a feel for the stock, and it does seem to get support down around that 138.25 low, and even though it closed a little bit weakened at the lows of the range. So you've seen, and I think many of you have seen Bible gap ups start out this way, and then the things just keep going. So they turn around, they go up. What's your take on Netflix, Dr. K? You like?
Well, I think for the longer term, they're making the right moves. So I think they're going to be heading higher on a fundamental basis. The technicals, you know, they look decent to me. So you know, in general, I'm bullish on this stock. And it's the same reason with, like, Amazon. You know, Amazon's making some very clever moves. Well, so is Facebook, but their charts reflect that.
Right.
These are the institutional leaders, also Google as well. Obviously, they're making good moves, and you can see on the weekly charts they're all looking very healthy. They look like they want to go higher.
Right, like the market. There's Google in a long base, and you know, Netflix coming out of a long base too, and that sort of thing can be very constructive because it had such a long time to just set up and work out all the weak hands. And what was the news yesterday? I noticed that they actually now sell more videos than Blu-ray or DVDs do. So more stuff is bought in the online format or digital format than in DVDs or
Yeah, they're
Blu-ray. So, and
DVDs
that's
and
amazing
Blu-ray.
to think about.
Those are like old. They're old. I mean, they're outdated, and Netflix is stomping all over them.
Yeah.
They've been making the right moves. So I think also the other thing is, I've had this discussion with some people in the industry. Hollywood's a dinosaur. I say a lot
Oh
of things
yeah.
are dinosaurs. And it gets people, their feathers get very ruffled, especially several years ago when I was saying this stuff. But it's coming to pass, and it's so much more evident now than it was, say, several years ago. But I could see, you could see these seeds being planted, and these seeds ultimately grow into oak trees, which uproot things like Hollywood. The quality of films coming out of Hollywood is second rate compared to what Netflix can generate, or Amazon Studio, which a friend of mine heads up. These are utilizing the power of many minds instead of one mind, and like Wikipedia and those types of sites have proven that you can create a far superior product when you have many people participating, as opposed to the old-fashioned way of having one writer write the screenplay. And Amazon's already won a host of many awards, so they're proving out just by virtue of the quality and the revenue generated from these productions. Netflix is its direct competitor, and I think they're going head-to-head, but they both excel in what they're doing, and they're a direct threat to Hollywood.
Somebody's going to buy them. Somebody's asking, do you worry about such thin profits on Netflix? And I said, why should I worry about it? That's what I would say. You got a viable gap up, I'm going to act on that basis. If that fails, fine, but it could come in, fill the gap, and then turn around and go higher. So, I wouldn't get bogged down in earnings and whether they're thin profits or thick profits or whatever you think they are, because people have thought that about Netflix since, I remember you went on CNBC, I think this was back in 2010, Dr. K, and you were talking about Netflix, and some guy was shorting it, and that would have been like an equivalent price of, I don't know what, $80
Yeah,
or something now? I don't know. What was it back? Well, let's go back in time here. 2010. Stock's now at 130, so let's go back 2010.
they did a
Yeah, look at
7-for-1
this. The
split.
stock was at just above $8. Yeah, I remember it was at 80, so they did a 10-for-1 split. So that's what I remember.
It was around 56 or something, in the
Something
50s.
like, well, yeah, whatever. But now look at the stock. It's at 130. How dumb am I? Why don't I just load the boat on Netflix at $8 back then? Well, it would have been 80 or whatever. But this guy was shorting, and he had a million reasons why, Netflix, their earnings aren't strong enough, and it's too thin, and everybody can do what they do, and blah, blah, blah. You're going to hear all kinds of garbage. And the other thing is, if you're a Can Slim cult member, you need to broaden your approach to the market. Worrying too much about what you can see going backwards is not going to help you so much these days, because everybody sees it. And for those of you who are new, we talk about this all the time, and that is that the markets have become more forward-looking. And I first noticed this when I was at O'Neill, and most of you may know that I was the head of the institutional services group there, and we were responsible for advising close to 700 of the world's top institutions: Fidelity, Gabelli Funds, Louis Navalier, you name it. Strong Funds, Fidelity, I think I already said them. Just you go down, it's like a who's who of institutional investors. Soros was a client. Scott Black of Delphi, who's a big value guy, probably one of the best value guys I've ever seen, and he was the one who showed me that there are a lot of ways to skin a cat. So Can Slim is not necessarily the only way the market works. The market is very deep and very broad, and it works in very many different types of ways. And Can Slim is a high-risk system that, high risk, high return. But it's not the only way to skin a cat. And I think in this market, and today especially with everybody having access to information at a moment's notice, there's no edge to looking backwards. Everything is forward looking. And that's why I noticed that the institutions back in the early 2000s were asking us to put more earnings estimate data on our system, on Wanda, and to show the earnings line going forward on the chart. So you scale it at 20 times EPS, and they can see, you know, where the price would be if it was selling at 20 times earnings 5 years from now. So they get a good sense of that. That was what they wanted. And I also knew that, met a lot of these guys. They're very smart, and they look at a business and they figure out where it's going to go, and they start buying the stock. They don't sit there and pull out, you know, daily graphs and go, oh, 5 quarters up and 25% earnings or better, sales up 20%, return on equity, this and that. The pattern is this. And now they just look at it and they figure out this thing's going to be worth a lot more later on for this reason. It's usually thematic, and they buy it. So that's what's going on with Netflix, and that's what's been going on for a while with Netflix. So, you know, and I understand this may be a little bit dismaying to a new CanSlim cult follower, but, you know, it's more a cult than anything else, and I wouldn't get bogged down in looking backwards. So I think CanSlim needs to be revised somehow to have more of a forward-looking flavor to it. But I'm not really sure how you do that and put it in some sort of a magical code that you can just plug in the numbers and the answer comes out. You have to use your judgment. You have to do a little sleuthing around, a little detective work on the internet and studying the company and trying to just understand what's going on in the world. Right, Dr. K?
Yeah, CanSlim's been a dinosaur for a number of years, and I know there obviously a lot of people have dropped out, but there's still some diehards that cling to it. They use what O'Neill would call that isolated case example. They remember the one time it worked, but what about the statistics, you know, of it failing so many times, especially over the last several years? There are elements of CanSlim that are still useful, but as a whole, it's not the way to profitability. And you take a company like Netflix or back in the day Amazon. Amazon didn't have any earnings, and that was one of the most shorted stocks and hated stocks because it just kept going higher. If anyone remembers, in the late 90s, it was one of the top performers, even though there weren't going to be any earnings out to, I think, 2003 or something. I mean, you know, so that was the argument. That was the classic argument. Certainly the CanSlim argument as well. But now, more than ever before, we have these types of strategies that are not, they don't correlate with direct earnings or even earnings out to a few quarters because the strategies that work really well often are losing strategies in the beginning but end up reaping huge profits in the end. So you have to be more forward-looking now than ever before. And a fit-in-the-box strategy like CanSlim is not something that not something that's going to really help you with your analysis in sizing up what's the next big leader. But as I said, you know, there are obviously elements to CanSlim that are still valid. So you have to just be wise in terms of what you put into your strategy, and obviously you want to keep the elements that work. But yeah, it's a much more it's an environment that basically has more moving parts and deeper moving parts than ever before. I mean, back in the 90s, there were more script formulas, as in, you know, run the script and get a great output. But these days, it's much less black box oriented. It's much more discretionary as a result. So at any rate. Gil, are you back? I think he's run off to the restroom.
I just IM'd you. I just had to check something real quick.
Okay.
I'm back, so sorry to leave you. I think yeah, I messaged you on that.
I was going to say some more things. That's fine.
Okay.
Just hammering the point that you know, the earnings, you know, this whole thing with earnings, direct earnings, and it's not a good recipe. It hasn't been for a while. I know Navalier made his success based on earnings momentum, forward earnings adjustments to the upside, and that still has some validity to it. But still, when you have a company like you know, you have these companies that are dealing with areas that don't directly profit in the beginning. In fact, that's the wild card. That sometimes the profits are quite a long ways off. But Amazon is the poster child for that, because those profits were years away, and yet the market somehow knew that this company was going to be one of the leaders. I mean, it must have gone up well over 100-fold in the late 90s. I mean, it was, yeah, it's one of the. I'm just looking at the monthly here, and yeah, sure enough, it had. Yeah, it was about a 100-fold move actually from 1997 to its peak in 1999.
Yeah, so no need to be worried about, thin earnings. Anyways, moving on. Someone's saying Netflix announced they were going to spin off the DVD business and call it Quickster. Dumb name, dumb idea, stock goes down. You must have sold the position you held into earnings there, Scotty. Is that what happened? Now you don't like it, huh? I don't know. Maybe the whole thing's a dumb idea. Who knows? But I don't really need to worry about that. I just buy the stock. I made money shorting it yesterday, so I have actually a little cushion from that. I didn't play earnings roulette and hold it through earnings like the smarter people on the planet did. But, you have a viable gap up. I'm going to play it as a viable gap up. If it fails, I'm gone. It's that simple. Do I need to worry? No. You just trade. Don't worry. Just trade. Stick to your rules. So many people want certainty in the market. Anyways, that's an opinion, by the way, Scotty, just so you know. You could be right, but you could also be wrong. Anyways. Nvidia, we talked about that earlier. I think, what's the volume rate on that, Dr. K? We're running,
right
what?
We're at minus 9%.
Yeah, so it's kind of like not really drawing up. I think this thing's going to need more time, and it probably doesn't go anywhere before earnings, so leave it alone for now. I think you can play Netflix, and if it fails, it fails. But I'll show you some other things I'm looking at. Quantenna, see, here's why you sell this time a nutty move in a stock that's 245,000 share trader a day, or 245,000 share a day trader. Yeah, there we go. Now it's all the way back to the 50-day line. So you would have bought here, made how much? 20% in like 2 days, and you sit there playing for the big gain like a bozo, and it all disappears. So it doesn't, this sort of pattern in the old days, this kind of stock, I mean, back in the 90s, 245,000 shares a day would have been relatively liquid, and this probably would have just kept going. But I think the algos get it spinning and it goes higher. Square is hanging out along the 10-day. They've got earnings in March, so this looks okay, but like I said, you're near the highs of the big cup, so it may need to go sideways, but it acts fine. 20-day seems to be what it obeys more or less. Dr. K, I was going to suggest this. Maybe you could study the 20-day exponential moving average in conjunction with the 7-week rule type of thing and see if you see anything there. Because I notice the 20-day seems to come into play more often than the 10-day these days because the markets aren't as sharply accelerating to the upside as everything was in the 90s. And I'm wondering if there's a qualitative difference there that the 20-day maybe accounts for. So I don't know.
Well,
just a thought.
What I've noticed is that the stuff like Nvidia, the true leading stocks, the 7-week rule tends to work very well on. But we have so few Nvidias in this market environment, and so they tend to. Well, first of all, they tend not to move in that manner. So you really don't want to use a 7-week rule on the many stocks out there that just aren't going to go the distance. It's more profitable to be taking profits when the price gets ahead of itself rather than using any kind of long-term rule. And obviously the 7-week rule is designed to keep you in a winning position like Nvidia for the long haul. And that said, obviously the 20-day is more supportive, or it's more relevant today because stocks are moving in a slower way. It's a slower moving market. So I would say the 20-day is just more relevant as a guide. But again, I wouldn't use a long-term approach with the 20-day, because again, I think the odds are against you essentially. So the 20-day is just a good tool for continuing to trade as we advise. Keeping your stops tight and taking profits when you have them, in context with the chart. And hopefully, actually, we'll with I don't know if we're going into a new market phase, but 2016 certainly was a tough market, and perhaps the tone of the markets have changed since inauguration. At least there's some minor evidence as to that.
let's keep going down the line here. Steel Dynamics, just like X. So these guys come out, I think Steel Dynamics comes out with earnings next week on the 24th. And then X is not until the end of the month. So here's this Suncoke Energy breaking down. So that one's basically going to be taken off the list. That'll probably be the only one. We haven't taken Nvidia off. Here's just the trade desk is just hanging along the 20-day line. We talked about this a couple of weeks ago in the focus list review. You might try buying it along the 50-day line. It's a little squirrely, and oh, there's my pet cricket. He's calling me. I don't know if you guys heard that. I don't know if you can hear the TV either because I'm watching the inauguration. Let's see. So this looks, you know, kind of a choppy base. Earnings are coming out when? Let's take a look at this on 2/9. So coming up pretty soon. Viva again. We talked about this one. It seems to be hanging along here. 42.72. It's getting down there on the 620. And then Yelp was added this morning. I've actually been playing Yelp for a while and trading it. You can see it's kind of volatile. It started down here, and you had an undercut and rally back in here, and you get a pocket pivot up through the 50-day here, and it runs up real quick, and then it yanks back to the downside. Now it's hanging along here. You had a pocket pivot yesterday, believe it or not, I think. 1, 2, 3, 4, yeah. Yesterday would have been yesterday, which is here. And you can see you had a pocket pivot in here, and you got support off the 10-day line. So I think we put this out before it pulled back, didn't we? And so I'm stepping in. I stepped in on the pullback here. I also like, you're a big fan of Yelp, right, Dr. K?
Oh, it's just it's functionality.
Yeah.
It makes life so much simpler wherever you are. You know, you can find out all the places that you're looking for. I mean, obviously restaurants, but you know, to find like an Apple store or find a mobile store, you can just, you know, punch it in, and it
Right.
gives you, you know, all the places. It's, you know, it's quite indispensable these days.
Yeah. No, I noticed you used it the other day when we were out to lunch, and you had to check on your wife's cell phone service. So, anyways, so Grub is another one I kind of throw into the same area, and they've actually got strong earnings estimates. They had a big gap up pocket pivot, but I actually started playing this in here, believe it or not, last week, and I was shorting it. Okay, look at this, and this is something I do a lot in this market. I will be shorting something, and then I will notice that it doesn't want to go down anymore, and you're starting to feel a persistent bid under it. And people ask, well, how do you know? You know, I don't know how I know. I just kind of feel it. You know, you're short the thing, and first of all, it may put you through one pair of underwear, or you're making money shorting it, and all of a sudden your profits are starting to disappear pretty quickly. So I don't have any real indicator or any meter or anything that I can tell you. You know, I can tell when this thing's starting to turn, but I could tell in here because I shorted it. Here, I'll tell you my Grub story. How's that? I see that the gap up on a buy recommendation here. So I short it, and guess what? It rolls down and closes just below the 50-day line. The next day it goes lower. So I'm thinking, great, this thing's going to break, head for the 200-day line, which you can barely see down here poking its head up. But no, intraday it turns around on my 620 chart, so that makes me cover the stock. And then I notice it gets back above the 10-day, and it's pushing hard because the volume's the selling is just drying up, but intraday you're seeing volume picking up, and so the thing turns and I go long. And then the next day it gaps up, spins around, and closes up higher, and it's been floating along here with earnings coming up, I think, on the 2nd of February, which is in a couple of weeks. So I sold into this move. Should have bought it back this morning, but I figure since Yelp doesn't come out to the middle of the month, I'll hang there because there's similar stocks. Anyways, but I do that a lot in this market. And Mobileye is a great example of that too. You know, I was trying to short this rally on this day at the end of December, and it's coming up to the 50-day moving average here, and I'm shorting it. And I'm noticing that it's not giving it up. It's just pushing through the 50-day. So what do? I cover my short and I go long, and the next day it keeps going higher. It pulls back a little bit, and then boom, it jacks above the 200-day line on a big pocket pivot. At that point, though, the stock's, you know, a good 10-15% extended, so you figure a good yank back is in order, and that's what it does. This kind of looks ugly But when you've got 22 million shorts in the stock, or 22 million shares sold short versus a float of I think 94 million, they're going to come after it again, and if it starts getting some downside momentum, they may jump all over it again and push it down. But then you notice they're probably not natural sellers, because the volume gives out and it starts to drift back above the 200-day. It pulls into the 10-day, holds above both the 10-day and the 200-day line here. That was 6 days ago, and then it's just moving higher. And I would love to buy this on a pullback into the 200-day line or the 10-day line if it happened. I'm out of it now. I took my profit on that going into year end and early in January as well, and we'll see what happens. But this sort of thing, you know, there's this whole idea about having to be right or wrong, and it's like, get that whole thing out of your head. You don't have to be right or wrong. I'm going to tell you, I'm probably right once for every 2 times I'm wrong, or I'm wrong twice for every time I'm right. Maybe if I'm lucky, I'm running 50-50, if I'm lucky. But what does that mean? That means you're going to be wrong at least half the time. So if you're into this idea that somebody's a guru who knows everything and they never make any mistakes, you got your head where the sun doesn't shine. And you're also looking at the problem, the whole completely wrong-headedly, or just, you know, not correctly. Because the problem isn't about being right. It's about using the information you gather or feel viscerally, if you have a position, that you gather from the market by taking a position and being wrong. Because sometimes you take a position in something on the wrong side, either long or short, and you start to get a sense that you're wrong. And what can you do? Well, instead of insisting you're right, you simply do what Livermore said, and you just move to the not the bullish or bearish side, but the right side of the market, and make yourself right. So you can use the information you get by being wrong to be right. And that's what I do with being wrong. So I don't have a problem being wrong, because a lot of times I can tell you when I'm wrong, I can turn around and be very right and make a fair bit of money. So there's this whole idea of, you know, I'm wrong or right. That's just for idiots, and something I used to run into. I remember when I was a broker, because you know, brokers pride themselves on making these great long-term calls. I don't really go there, and I don't have to be right. I can be wrong 2 times for every 1 time I'm right, and then one of those 2 times I'm wrong, I get information that helps me become very right. So anyways, Z is for Zorro. No, it's for Zillow. And look at Zillow's weekly base. That's a nice looking cup with handle, you know. So if you're a can slimmer, you can salivate over that. But let's look at this on a more granular level. You can see it's a very choppy pattern, and so the only thing you can do is buy it on weakness. Notice how you get these undercuts of the prior lows in here that try to go somewhere, but they don't really. When are earnings out, Dr. Can, this one? Let's see.
We've got...
I showed 2.9.
I showed 2.8.
All right, close enough. I'll bet you 2.9 is right. Go to briefing and check briefing. Let's check briefing. Zillow says they don't show their earnings report date. I'm sorry. Briefing says, doesn't show it. Huh. Well, I'll go with that. Check their website, though. But this one's hanging, so the only way to buy it is on pullbacks, probably into the 50-day. But it's hanging in okay, and the base looks nice, so it might be something to keep an eye on. Someone was asking about what do we think about CF relative to Mosaic. They're kind of all the same. The difference here is that this one isn't coming out of a low base range. If you consider this to be the range in here, it's not coming out. But my guess is if you see one of them moving, they're all going to be moving eventually, like the steels. So, or like the way the steels act, they all seem to move together. You know, they're like sort of like water ballet. They all move one way, then they all move the other way, and they swish back and forth, bounce off their 50-day moving averages, show a pocket pivot here and there, but go nowhere, and go back underwater, and then stick their head back above it. So, you know, it's like a big water ballet, as I like to call it. But in any case, Agrim is another one, and you can see it's probably trying to post a pocket pivot today. Let's take a look. Here's this feature that I've showed you guys before. Yeah, the volume, projected volume right now is showing...
It should have
you
a...
can see, what you guys can see here is, you see this projected, this green part of the bar, that's projecting the volume based on the rate so far today. So that tells me that we might get a pocket pivot, but the other thing to keep in mind is that it's still not even halfway through the day, so you could see things turn around. Let's see. Somebody's asking about the airlines are another one. They're water belly stocks too because they go up, they go down. But they had a nice move they've been basing for a while. Delta has looked like it wants to break because you had some selling as it came through the 20-day line. I'm not sure, where this is going because we've talked about this before. And you can see that, it's a big, ugly kind of pod-like or punch bowl formation. Remember, you can see a punch bowl, but that doesn't make it a pod. A punch bowl of death means the stock has to experience death. And what's the first sign of death is often a high-volume breach of the 20-day moving average, which we haven't really seen yet. Every time it kind of dips below, it's doing a little water belly move, and that's going to come back above the moving average. I think as long as it holds at 58, it's probably okay, given that the two are converging here. And they came out with earnings the other day, didn't they? Did they come out with earnings?
No, yeah, they did on the 12th of Jan.
Yeah, it was kind of like, obviously it was kind of blah, but you have, someone's asking Dell versus Save if you have time. They're all the same. They're all basing the same. Look at like JetBlue, I think was trying to hold the 50-day moving average. UAL is actually acting better. So notice how it's actually holding up in a nice little mini cup with handle type thing. You got American Airlines doing the same thing, holding up in a pattern. Love doing the same thing. They all look the same. So I think it's like 6 of one, half a dozen of the other. So the group is moving together, kind of like the steels, kind of like the coppers. Finisar, whoops, I'm being dyslexic again. Here we go, Finisar. This is an interesting name. Yesterday, Aclaro, I hope I'm pronouncing that right. Here's their pattern here. They had a big gap up move on big volume yesterday after beating on earnings and showing a nice report. This is what it looks like on a weekly chart. It's a little volatile in here, but it looks like it may try to get out of here. And they're an optical name. I think there's supply components, optical components for fiber optic networks. I'm not into the nuts and bolts of it all, but there are some people who are, and I applaud that because if I had a good understanding, I would have known that light was not one to go for because it started to rally on Aclaro's earnings, and then it reversed and closed at the lows. And then Fabrinet also was not one to go for because it moved up to the 50 and reversed and is now back below the 200-day line. Sienna was not one to go to because it tried to rally above the 10-day line and it reversed to close near its lows yesterday. And Juniper Networks, which has already been weak as of late, also tried to rally back above its 50-day line but reversed and closed basically flat, more or less slightly up but flat yesterday. Now it's moving lower today. So, I think there's something different about Finisar. So you get in fact, I thought this thing was dead, frankly, but this is how news can affect a stock and change things very quickly, so you have to be in tune with what the price volume action is telling you in real time, because I really was thinking this thing would have a better shot after posting this really, like, I'm going to call this a deep doo-doo type of pocket pivot here, because basically right off the lows of this pullback. And there it is right there. There's the volume. And then yesterday, boom, this thing gaps back. And I remember I wrote on Wednesday that this stock needs to get back above the 10-day for me to be interested in it again. And it's almost like it heard me because the next day, Aclaro comes out with good earnings and they gap above the 10-day line. And then they just keep going higher. You can see it opened just above and pulled back a little bit and then continued to the 50-day where it ran into some resistance. Now you're getting this little pullback today. And I think your volume rate is running...
I'm showing minus 6%.
How much?
Minus 6.
Yeah, so it's running below average. So to me, I'm buying this pullback today. So I bought it just a little while ago, around 30.30. So watching the 620 chart on that, they come out with earnings, I think, in the middle of what, February, Dr. K? Is that right? I'm showing, well, briefly is probably the best place to go.
March 8th. March 8th.
March 9th. So you don't have earnings to worry about. So maybe it tries to get above the 50-day line and it's building a new base.
1 day ahead of me on all these earnings. What source are you using?
I'm using Briefing. I've got March 9th on briefing.
Yeah, I'm March 8th, but yeah, every time you're one day ahead, but at
Yeah,
least
I
we're only
think
one
if you
day
get
off.
an idea of when it is, that gives you some idea as to whether you can trade it, and maybe it has a move before then. So,
Yeah.
but you can see the stock's had a big move already. Okay, so it needs some time to base. So this is actually forming what we used to call the double flying eagle formation back when I was at O'Neill. When I was the head of institutional services at O'Neill, the institutional sales guys, some of whom were very experienced and had been in the business 40 years, 50 years, like O'Neill, and they used to make fun of the need to label bases, and so they would come up with all sorts of funny names for patterns. You know, the bird's nest, the clown's feet. That's the one that I applied to what is a big, ugly, late-stage cup formation. The uh, the double flying eagle, all this weird stuff. So, and a lot of these guys are really good investors. So, and what I always thought was interesting is some of them were really good long-term investors, like Bill McGann. You remember him? And Jim Miller. Those
Oh yeah.
guys. They really had an institutional eye that they developed over the years, and they were very skilled. And so when I was at O'Neill, you know, Bill O'Neill's a guru and all, but he had a lot of smart guys there, and most of them leave. So Lee Freestone left, and he was a smart guy. Anyways, notice Yelp moving above 41 now. Some other names I like. There's the V. I'm just watching that on the 620. Momo is getting back some of its Momo, but you know, here's a stock that had a big move back from June, July through the end of the year, and then more recently in the last couple of months it corrected. And we found out that Alibaba had sold their stake down in the company, and they could be done. But notice how it comes out of this structure. You have this big base structure. This is a weekly chart now, and you have this big base structure, and it comes out here. So, you know, that again, here's a situation of a stock coming out of a big base structure. It has a nice move. It's very playable. It doubles. Well, does it double? Not really. It gets close, though. From like, I think we put it on around 16 or something, right? And it ran up. And now what you have is the stock. So we're at the top. You see the top. It's pulled back to the top of this structure. So that look to me looks normal, like a normal sort of pullback, given the context of this move. So now it may go through a whole base building process. And I think one way to get an advantage in this market is to, if you understand bases, it's not such a bad thing. Keep in mind that somebody creates the bottom of a base, and that's usually an institutional investor because it isn't somebody who just started subscribing to IBD buying a breakout that everybody sees. I mean, that person would have been buying up here back in early November and getting their head handed to them immediately. So the institutions are a lot more shrewd than that, I think, especially these days. So you get the pullback all the way in, and now the selling is dried up, and it's trying to come up and out. You have pocket pivots in here. I'm actually going to show you this on this chart. Oh, there he goes. He's doing the oath. I thought they were going to wait till noon. Oh, it's almost noon. Anyways, you see some pocket pivots coming up. It's holding tight. That looks viable to me. I would look at Weibo as another one. I think the Chinese names could all come back. Baba comes out with earnings next week, and that one's starting to come back. You see that? So you can see all these roundabout type pocket pivots. This is one area I'd watch because the idea is that Trump is going to be bad for the for Chinese companies. I think he's a pragmatist. I've said this before, and I think he's going to work out some great deals with China. So I think the Chinese stocks have all corrected. I mean, maybe they were telling you that Trump was going to win the election. And he just finished the oath of office. There he goes. So we now officially have a new president. As my daughter said this morning on her way out to school, thank God. She's 17 and she's gone through 8 years of Bush and 8 years of Obama. And she thinks they both suck. So anyways, if you want to know what the younger generation thinks. What other Chinese names? Oh, NetEase, maybe. Some of these coming out with earnings. You know, you notice how they all look the same. So the groups, again, you see the airlines look the same. You see the steels look the same. And the Chinese stocks look the same. So they may be happening. So that's one area of the market to keep an eye on. Anyways, Hope you've gotten some ideas out of this, but I think, we have a pretty good buy list in general. There are some other names that I've been playing outside of our focus list because of the strong sort of turnaround action I'm seeing. They're a little trickier, but some of them are working. So all I can say is I'm up for the year so far, and we're a little over, almost 3 weeks in, so that's good. Better than being down to start the year out. In any case, that's all we've got. Anybody have any questions before we sign off? I think I'm going to give you one tip, and during earnings season what I would be doing is every day check at a list. You can go to briefing.com and it'll be earnings revenue calendar you can look for on their drop-down menus. You pull that out and you can see who's announcing that, for the week every day and after hours, and you have a list of stocks just to keep an eye on because you may get a viable gap up that you can act on the next day. And that's something I'd be watching for. So anyways, thanks for showing up, you guys. Have a great weekend. For those of you in Southern California or in California in general, stay dry because we've had a series of 3 big storms coming through. One yesterday, one is coming through right now, and a bigger one is coming through on Sunday. I wonder if it'll be like when I was 11 years old in 1971. I believe it was January of 1971. It snowed, and where we live was in the flatlands between, basically on the coastal plain, essentially, and it snowed. Good thing we didn't have the climate change nut jobs back then, so they probably would have all gone nuts. Anyways, my take is I think we could rally after this is all over with, and we'll just have to see what happens. But you can see where the setups are and where the things to play are, and you just work off the setups, keep tight stops, and it should keep you out of trouble for the most part. And if you get caught in something like an ANET and it gaps down and heavy on, just go away. You take a 6-7% loss, just go away. Because if you didn't, now you'd have a 12% loss. And it's just better to be out of it than, what's the old saying, Dr. K? I'd rather be out wishing I was in than in wishing I was out. And I think that holds true most of the time. Anyways, thanks for showing up, everybody. We'll catch you next week. Have a great weekend.